Hey, my name's James Nicholson. Welcome to this channel. Now, in this video, I'm going to talk about something I really wasn't expecting to, and that is, are interest rates about to rise for the second time this month? I can't believe that we're even having this conversation. Well, if you've seen the news in the last 24 hours, you've seen that the pound is absolutely crashing at the moment, and that's purely down to lots of stuff, new government, the things that they put out there to spend a ton of money to try and get the economy going, and the markets don't quite believe in it. They've voted that they don't feel that it's maybe the right decision. So this video, we're going to talk about exactly what that means for investors. But before we jump into that, I'd like to welcome new people to this channel, and I want to invite you to join us on this journey together. Now, I'm a property investor of 23 years. I'm building my portfolio this year, whatever happens in the market, and I'm building a portfolio for my two daughters. Georgia, who's 21. We've just got our second deal. You can see all of that on this channel, and my little baby Amelie. So how can you join us? Very easy. Take that finger of power, spin it round, smash that subscribe button, and hit the bell notification to learn all about what's going on. Well, last week the interest rates went up from 1.75% to 2.25%, and we're expecting the interest rates to go up again in November. But the government ran a mini budget on Friday last week, and there was some positive stuff in there for property investors. I made a video on that. One was talking about stamp duty as a slight reduction in between 0 and 250%. It's gone from 5% down to 3%, which is not bad. It will help out. I've just completed a deal 2 weeks ago, and that would have saved me about $4.5 grand, which I wouldn't mind having. Not too bad, right? But it is what it is. And so the other thing that they're doing is obviously looking to reduce national insurance contributions, and they're looking to reduce people's tax rates, right? Particularly for higher earners. And I don't think that's necessarily the right thing to do. They feel that that money will trickle down, they're saying, to people that need it. Now, the markets don't really think that this is what we need and what's going to help the economy. And so the pound, off the back of that, has pretty much crashed. It's at one of the lowest it's ever been to the US dollar. Now, that has a big impact on a lot of businesses because we're a small little island and we actually import a lot of stuff. And so that means those things are going to get more expensive. So your iPhones, if this stays for a long period of time, an iPhone will go up in value or costs. It will cost you more money to get an iPhone, a MacBook, a PlayStation, food, and various other things will go up. Now, that's going to keep pushing inflation up, which is not really what we're trying to achieve here. We're trying to drive inflation down. So one mechanism that we have to drive inflation down is to raise interest rates, which the Bank of England has been doing. Now, they're very clear that they are going to keep raising interest rates until inflation is under control and back down around 2 or 3%. And at the moment, we're near a 10%. We're just about to go up again because we're going to have another fuel cap increase in October. So that means people's costs are going up again. So with all of this in mind, the Bank of England today is having a meeting and potentially going to look at raising the rates, or there could easily be another emergency meeting before the November meeting. It's looking very possible. Now, I've got a friend who is a very senior analyst and he works in the financial markets, and he's saying that the stock market is already pricing in an interest rate rise in November of 2%. 2%. I mean, the last interest rate rise last week was 0.5%. So people on variable rate mortgages are going to get hammered if it goes up 2% next month. So what can we do about that as investors? Because let's look at solutions, right? Well, the solution is that you fix your interest rate now. And so that's what I'm saying to anyone that has a deal. In fact, we're also looking at it on our family home. We have a deal that ends next year. We're looking at it and we're going to have a family meeting about this. It's probably likely that we might actually leave the deal we're on, pay a penalty just to make sure that we've got a good rate fixed for the next 5 years, right? That's what we're actually looking at now. Because if we leave it, who knows what the rates might be next year. And so that's a consideration. If you're in a fixed rate mortgage, yes, you might pay some penalties, but speak to a solicitor, speak to a mortgage broker, and just see, is it an option? Like, should you consider it? Some of you should. And we're looking at that right now as an option to pay that off, get the penalties, pay those off, and then look at just getting that certainty, right? So all of my portfolio in the last few months, we've been remortgaging it and refinancing it. We've fixed it for 5-year terms, and that's what I think you guys as investors should be doing. Now, if the interest rates are going to rapidly rise, now this outlook is a lot more uncertain. So possibly the market will start to drop, right? That's something that could easily happen now off the back of this. If the interest rates do go up 2% in November, or even if they go up 1%, there's going to be less money there. And so maybe the market is definitely going to cool off, right? Whatever happens, the market is 100% cooling off, but maybe it's going to drop. And so that could be opportunities. Now, as investors, should you sit on your cash now and wait? I don't think you should. I think that if you find a good deal today and it's a good deal, you should grab that good deal, but fix it for as long as you can, right? Because if it's a good deal when the numbers stack up, the market, by the time you wait for it to crash, it either may not happen, that's possible, or what might happen is if the market might go down, but the interest rates are so high that your monthly payment is significantly more. So don't worry about what's going on in the market so much if you're fixing deals for a longer period of time. I just think that lots of people will start to panic. I think that auction houses will probably get quite busy in the next few weeks and months as well, because people just want to offload properties. And I think the people that have got individual properties in their personal name and they're coming up for a remortgage at the moment, some of those people are just going to think, you know what, I've had enough of this, and they're going to put the property on the market. So there's going to be some really good, tasty deals around in the next few months and the next few 2 years for sure. And so you should be looking for those deals, negotiating a good deal, and just getting those deals and just getting them on a long interest rate, on a fixed interest rate for 5 years, and ride this out, and you'll do very well off the back of that. So I think that interest rates are definitely potentially going to rise again before the next November meeting. That's what my gut's telling me. It's what a lot of people are saying in the market, because the only thing that would stop that is if the pound suddenly gets a bit stronger in the next 2 weeks. If that happens, then maybe we're not looking at this as a problem. But if it doesn't, then yeah, potentially we could have an extra rate increase that we're not expecting. Even if that doesn't happen, I think you're definitely going to see more than a 0.5% interest rate rise in November. Like the minimum 0.75%, which puts the rates up to 3%, potentially 1%. But the stock market's priced in for 2% at the moment. So possibly 1.5%. I don't think we'll get 2% rise, but possibly we'll get 1.5%. Which is crazy, right? And so you just got to be prepared for that. But investors, don't panic. Get your deal sorted. Get a good deal locked in. Once you've got that, then who cares what happens in the market? It's not going to impact you at all. And so you'll have that certainty. But I'd love to know your thoughts on this. It's going to be an interesting one, right? It's definitely going to be a crazy next year or so. There's going to be lots of opportunities. More millionaires and billionaires are made in conditions like this. And that's why you should be looking at growing a portfolio during this time, but getting good deals that stack up, fixing that rate for 5 years so you get the certainty. Being able to add value to those properties is a real core feature as well. Do let me know your thoughts in the comments. Do like this video, guys. I hope you're enjoying the content on my channel. Subscribe if you didn't earlier. Come and join us at our live event in London. In the description, I've put a link. You can grab a free ticket to that event. You can join the VIP list. Click on the link, add your details, and also check out all the other content on my channel, including this video right here. Bye for now.